Good afternoon once again. Thank you all for joining in on this afternoon. So, the topic, as you see on the screen, we are going to cover some specific topics of VAT, which are relevant at this point and more oftenly used for many companies. And we'll also be touch basing upon the city regulations, city registration challenges, and deadlines. So, this is what we're going to cover in this session. So the plan is to do it for 1 hour. Let's see how much time it is going to take. So if you have any questions, you can just drop in the chat box. We can address them either during this session or afterwards. And at the end also, if you have some time, we will try to take up some questions. Plus, we'll also try and, as we are recording it, we will share the presentation as well as the recorded version later on, just in case if you miss in between. It will be also available on our YouTube channel after 1 or 2 days. So these are the few topics that I mentioned. We'll just quickly talk about the VAT and then registration of VAT and then challenges we have, written filings for VAT and amendments. Lately, we have been seeing the instances where the FTA is levying penalties for delay in going for amendments. So we can look at it. What are the requirements to go for amendments, and in which instances we have to do the amendment on mandatory basis, and what are the options available to go for amendments. And then we also will talk about the VAT refund and how to apply and all those. Then we will talk about the deregistration for VAT. When are you expected to go for deregistration? What are the various options available? What is the documentation that is required? And what are the timelines that you have to go for deregistration to avoid the penalties? And nowadays, we see many companies are receiving the emails from FTA to share further details and also to conduct audits on your VAT returns that you filed. So, as you know, up to 5 years period, FTA can come to you and then do audit of your records. So, what all are expected to keep as part of your audit expectation, and then how do you have to be ready to handle the FTA audit is what we will discuss about. And finally, we'll talk about the corporate tax registration challenges and deadlines, and what are the penalties applicable for those. So this is what we will cover. So along with me, I have Rashid and also Amrutha, who will be talking about themselves little later in the session. So my name is Balaram Vuchidi. I'm a chartered accountant from India. So I've been here for last 13 years, and I have total experience of about 20 years career. And the spectrum auditing and spectrum accounting is been here for last 9 years. We do provide audit, accounting, corporate taxation, value-added tax, company formations, transfer pricing, and so on services. So this is about our profile of the firm and myself. So we'll quickly talk about the VAT. As you know, as most of you already are aware of VAT because it's been there for last 6 years. So it's nothing but VAT, as we know, it is an indirect tax which is levied on the sales, and it is primarily levied on the consumption of your goods and services at each level or each stage of the process or cycle, the distribution process. And the VAT is applicable on most of the transactions related to goods and services sales. And we have a category of service transactions or sales. Primarily, the transactions or sales are classified into taxable and exempted categories. And this taxable category of transactions are also further divided into standard rated supplies or transactions, and then zero rated supplies and transactions. So, but in a nutshell, most of the transactions are generally being subject to tax. So, all the transactions are subject to tax unless they are specifically excluded as exempted supplies or out of scope supplies. So that is what is about the brief background of the VAT. But now the most important thing is that we have done registrations earlier, and we have also done deregistrations and filed the returns and all those things. But are we doing them in the right manner or not? Are there any instances where we may attract some penalties for not doing them right? If at all, do we have any chance of correcting them now? How do we do them? If at all, if it is possible to do. And then at least now onwards, how can we do them right in the right ways? So that's what is the intention of covering these topics in our session. Uh, so let's look at each of the topic or areas that we have discussed or mentioned in the introduction. So from now, I'll ask Amrutha to take it forward to cover the rest of the slides up to some point, and then afterwards, Rashid will take it over. Yeah, so Amrutha, can you take it over?
Good afternoon, all. This is Amrutha here. So I will be covering the topics related to registrations and all. So before I get started, I am working with Spectrum, basically with the team of VAT and corporate tax. So to get started with the topics of registration and all, so registration is the first point where you can actually be linked with the FTA or the VAT. So to get started, to know about the VAT registration and more, you can register for VAT basically on two bases, either being it the voluntary or mandatory basis. So for in the case of voluntary registration, the turnover or the threshold that is calculated is for 187,500. You can go for voluntary registration on the basis of your taxable sales or expenses if it reaches the limit of 187,500 but below the limit of 375,500 during the last 12 months period. And also, you can register for VAT voluntarily if you are expecting your threshold to be to the limit of 187,500 for the next 30 days. So, on your expectation basis, also you have the option to apply for voluntary registration. And the mandatory registration is the case where you have the taxable sales or expenses above the limit of threshold of 187,500 during the last 12 months period. Also, for mandatory registration, also you can register mandatorily in the expectation basis that with the next 30 days, you are expecting your taxable sales or expenses to be above the limit of 375,500. So when we say this, the calculation of the last 12 months period, we have seen that usually people are with the notion that the last 12 months meaning is usually the 12 calendar months. But just to make sure about the calculation of threshold, for example, we can see that in Jan 2024, if you are calculating your threshold for the last 12 months period, it can be taken from Jan 2023 to December 2023. But for example, if you are calculating somewhere in between the year, be it supposing March 2024, the threshold will be calculated for the last 12 months period, meaning from March 2023 to Feb 2024. Also, supposing you are calculating a threshold in between the month, then from then onwards you'll have to start calculating the threshold. So we advise to calculate from the beginning of the registration. Wherever you're getting your registration done, from the effective date of registration, we advise you to have a calculation of your threshold so that you don't miss the mandatory limit. So also, in continuation to the mandatory registration, you are expected to apply for registration within the time frame specified by the FTA. Failure to do so, you will have a penalty of AED 10,000, which will be applied immediately after the application. You submit the application. The time frame being 30 days from meeting the threshold of 375,500. Next, we can go through the documents required for the registration. These documents will be basically the soft copies of all these documents are expected to be uploaded while you submit the application. First one being the trade license of the company. Second one, memorandum of the company. Memorandum for the cases of sole establishments, basically you won't be having a memorandum. So in that cases, we can upload the trade license or the incorporation certificate. Next one being the ijari or the tenancy contract to confirm the address of the entity. Next is the bank account details. Bank account is actually not a mandatory field at the time of registration. For example, some companies will be in the process of opening their bank account. So for them, the main points to be looked into will be the like no, they have the option to register for VAT without the bank account. So once the registration is completed, also you have the option to add your bank account to the submitted application. The next being the Emirates ID passport copies of the shareholder or the authorized signatory. Next comes the turnover or the expense details from the date of incorporation of the company. So this is where you'll have to provide your details of the expenses or your taxable sales. So from the date of incorporation of your company, you will have to provide all the details of your taxable sales and the expenses. So here one point additionally to be kept a note of is you can include all your sales for the threshold calculation, but not all the expenses. In the case of expenses, you can only consider the expenses in capital nature or the expenses which are to be contributed to the future sales of your company. Next, we have the expected turnover or expenses details for the next 30 days. For these expected turnover details, you have the option to also provide the agreements or any contracts that you have to be looked into. So if you're having the agreements or any contracts, you can also provide them as an expectation basis and then submit to the FTA. Also, the scanned copies of all your sales and expenses are also expected to be provided to the FTA, actually on sample basis at least. Next, you have the exports or imports details. Supposing you're expecting to have exports or imports, then the details of those also can be uploaded. Also, if you are registered for the customs, also if you are expecting to have exports or imports, those documents also you can submit as well. And if in case you're registered for customs, those details will also have to be provided to the FTA. So you'll be having particular customs linked numbers or the application form numbers of the customs. Those will also have to be added to the FTA portal. Also a valid email ID and contact number of the signatory for ease in communication for future. Next, we'll talk about the TIN and TRN. TIN is the tax identification number and TRN is the tax registration number. So TIN is actually a number which is not valid by law. It is usually used for the purposes where you are expecting to group register your companies. Supposing you're having one or more companies which are interlinked or in relation with each other, you can actually go for the tax grouping. And in those cases, you can apply for TIN numbers. And the accounts with TIN numbers are usually not expected to be having a legal existence, because if you have a TIN number, you don't need to file the VAT return or so. So the companies with TIN number are not having value or valid as such as the companies with TRN. So also if you are supposing you are registering with the basis of TIN number, you also have the option to convert it to TRN. So later on, once you convert it to TRN, you have the option to file your returns and so. So when you have converted the TIN number to TRN, that company will be having a legal existence. Moving on to TRN, once you register for VAT and then you have submitted the application, you'll receive a TRN number which is used for the filing and all for the payments or return filings. This TRN number is a valid one. And also when the company is having TRN number, we'll bring in a image that this company is having a threshold or turnover above 187,500. Next is the option of exception from VAT registration. So this form of registration is basically for the clients or companies who are expecting to have only zero rated supplies and no imports of goods or services or the normal standard rated expenses. So in that cases, they can apply for zero rated supplies. So usually by law, if you are having transactions in UAE, you are supposed to be registering for VAT if you are having taxable sales or expenses above the limit of 187,500 voluntarily or mandatorily if you have the threshold of 375,500. So if you have your supplies zero rated alone, meaning only exports, then you can apply for the option of exception from VAT registration. So if you are applying on exception basis, you need not file the VAT returns. Also, but then you will have to follow all the forms of registration as a usual VAT registration application, except that you will need not file the VAT return. Also, you won't be having any certificate of registration also if you're going for exception. So just to go through the items which are included in the zero rating are the basic exports, certain international transportation services, the aircraft or vessel transactions, investment of precious metals, and the first supply of certain buildings. Those will be considered as zero rated supplies. And then the crude oil and natural gas transactions, or certain education services and certain healthcare services. So all these transactions, if you are going through, it will be considered as zero rated supplies. And then you have the option to go for exception, provided you should not be having any imports of services, goods or services, or any standard rated expenses. Next is about the VAT return. So once you are registered for VAT, you have the option to file your VAT return, which is mandatory as per the turnover or your the VAT return period specified by the FTA. It could be either quarterly in every 3 months or month-wise as expected by the FTA. So once you are filing the VAT returns, points to be noted is VAT return is to be filed on or before 28th of the following month at the end of the respective tax period. As mentioned, it could be monthly or quarterly as stated by the FTA at the time of your registration approval. So if in case the 20th of the month is any public holiday, the next day will be considered as the due date for filing. So the net payable amount of your VAT return, it could be any payable amount or the refund. But if you're having your VAT on sales, then it is the net payable that you will have to pay. So this amount is expected to be reflected to the portal. That is, the taxpayer will have to pay the VAT amount to the FTA within the same day. Failure to do so will reflect in a penalty of 1,000 for the first failure, meaning immediately once you miss to make the payment, and 2,000 for every repetition within the next 24 months. And also there will be an interest calculated for each delay. For example, you are delaying your payment for 1,000 in the first due. 2,000 of the unpaid amount will also be calculated. That the interest for the 1,000 penalty will also be calculated on the unpaid VAT amount, and it can be calculated followed to 4% up to 300%. Just to make it clear once again, supposing you fail to meet the payment on same day of filing or within the due date, there is a case that you will be reflected with a penalty of 1,000 followed by an interest of 2% on the unpaid VAT amount. And if it's remaining the same for the next due date also, meaning the next month, it can increase up to 4% of the unpaid due amount, and it can be up to a maximum of 300%. Next is about the VAT amendments. So amendments are the basic changes that are done to a VAT registration application. It could be like after the registration, you might have had some changes happening in your records. These changes are expected to be updated to the FTA as and when it is happened. For example, you have your changes in the records made about the trade name or the company details. These details are expected to be submitted to the FTA within 20 business days from when the change has happened. So basically, these changes to the FTA portal can be done through two options: edit and amend. So first, we'll move on to the edit option. For considering the edit option, the FTA approval is not required. The business activities, GCC activities, custom registration information. So the changes in these forms or these three options can be made it as and when it is approved to applied to the portal. FTA approval is not required for this option, and it is automatically reflected in the portal. Next being the amendment option. Apart from the edit option, amendment option is a bit different because the FTA approval is required for this amendment or changes to be done. So basically, these four forms of applications is liable to be gone under the amendment option. First one being the details of the applicant, next the contact details, business relationships, and declarations. So any changes that happens to these four forms of the application are expected to go under the amendment option, for which the FTA will check the documents and then only will they approve it. So once you submit the amendment application through these options, FTA will take a minimum of 20 business days to review and then will get back to you. Supposing FTA is taking a period of more than 20 business days, there is an option chance that they might come back for resubmission asking for more clarifications about what you have submitted. So among the option of details of applicant, following are the fields that you will have to look into. First one being the legal status of the company. So there is a chance that at the time of registration, you might have been registered as a limited liability company, and later on, you might have changed the legal status to a sole establishment or any other. So at this point, you are supposed to be approaching the FTA, amend those details, and submit the valid documents as and when it has happened. Next one being the company name. Supposing you change the company name after the registration, you're expected to submit it to the FTA. Or if there is any change in the shareholding structure. For example, there is two or more shareholders at the time of registration, or now it has changed to maybe single owner also. All those details should be submitted to the FTA. with the concerned documents also. Then being the address change. For example, there is any change in the address, that also has to be updated to the FTA. Next one being the renewal of trade license, Emirates ID or passport copy, basically the KYCs of the shareholders. This is some kind of notification that we have seen recently that most of the registered companies are receiving. So this notification was not approved by, like, notified by the FTA earlier, but then now they have been notifying it, and then you're expected to submit the updated details to the FTA. So, for example, in 2018 you got registered, and later on the renewals of the trade license or Emirates ID or the passport copy of the shareholders were not updated. But then now onwards you're expected to update all these details as well. As of now, there is no penalty for the updation of this. If you are failing to update, there's no penalty at the moment, but later on FTA might penalize also. So these amendments, the amendments are expected to be updated to the FTA within 20 days of the change of the occurrence. So for example, on Jan 15th, I'm changing any of my details, or being the Jan 1st, we can say. On Jan 1st, I'm changing my legal type, or the shareholding structure has changed, or even the name of the company, any of it. So I should be submitting the amendment application at least within 20 business days. Failure to do so can be attracting a penalty of 5,000 for the first time, and for any repetition, it can be up to 10,000. So, apart from this, there are two fields which are completely restricted from being changed, which is the details of the applicant, about the applicant, and the communication preference. These two fields will be maintained as per what you had submitted at the time of registration. Next, we'll be talking about the VAT refund. So, refund is basically the option to claim back the VAT you actually paid for your purchases or expenses. So at the time of return filing, you might have filed the details of your purchases or your expenses. So this refund is the option to claim back the VAT for that. So the first point says when the input tax is greater than the output tax on a VAT, the taxable person can request for a VAT refund. Basically, if you have the VAT on your purchases or expenses more than the VAT on your sales, you have the option to go for refund. And FTA will take up to 20 business days to review the application and notify the taxable person of its decision. So once you submit the application of refund, FTA usually takes 20 business days to review the application, and they might either get back to you for further requirements, or they might either accept it or reject it. So you have the option to complain, to raise a complaint after the completion of 20 days to escalate the application further. So this 20 days is generally the time frame that FTA requests for usually, but it can also get extended from case to case. So once the refund is approved, FTA will take up to 5 days to refund it to your portal. Also, to add a note to this, supposing you have any kind of refunds after filing your return, it is not necessary that you will apply for the refund as and when you submit the return. So you, supposing you have several refunds from several quarters that is accumulated in the portal, and later in any cases by chance you are being penalized for any of the transactions that is happening. For example, you have a penalty for late VAT return or VAT return filing or the updation of any KYCs or amendments. If you're having any penalties, those penalties will be straight away getting set off against the refund that is available in the portal. Supposing I have a refund of around 10,000 in the portal, and then later on, I'll be thinking that I can apply for refund after accumulating it to a huge amount, maybe. And then, supposingly, I get a penalty for late return filing. I missed a return filing and I'm penalized for 80,000. That 1,000 will be directly set off against the refund 10,000 that is available in the portal. So, net effect, I'll be having only 9,000 refund in my portal. So some points to be looked into at the time of refund is about the bank details firstly. So as mentioned earlier, bank details is not something that is mandatory at the time of registration. So there is a chance that you get registered for VAT without the bank details, and later on you forget to update these details in the portal. So there is a chance that you miss to apply for this or update this, and then you apply for a refund. So in that case, the refund, when you submit the application and FTA does not find any valid bank details in the portal, there is a case that the application might be rejected. Also, secondly, you'll have to have valid documentation when you're submitting the refund. a proper bank account validation letter or certificate must be provided to the FTA. So this letter must be considered from the or collected from the concerned bank, which states the account number or the bank details of your company. And also, supposing if your bank is any international account, for example, you don't have any UAE bank and you're providing details of any international banks, meaning outside UAE, the refunds to this cases will take an extra of 5 business days. So usually, businesses FTA will take 5 days for refunding the amount, but in the case of international banks, they might take an extra 5 days business days to approve it, and also there will be transaction costs which will be attracted to your concerned bank. Also to be noted is the maintenance of the proper tax invoices. We have seen that many clients or the taxpayers may not maintain proper tax invoices. Supposing you are having refunds from 2019 onwards and then you're going to apply for a refund 2 to 3 years later, there is a chance that you might not be able to produce particular invoices if FTA is coming back to you. So it is always better to maintain proper tax invoices, be it of your sales or expenses or whatever it might be. Because there is a chance that at the time of refund, you are expected to upload a sample basis invoices of both your sales and expenses. So if in case FTA is getting back to you after reviewing your application, and then they ask for particular invoices based on the summary that you provide to the FTA, you should be in a position to provide the tax invoices. Failure to do so, FTA might also reject the application. And second one saying supporting tax invoices are to be uploaded in the application and should be in a position to produce additional information if FTA gets back for further information. This is the same point saying that you should be having invoices in your hand. If FTA is getting back to you, you should be in a position to produce it. And also, you should have detailed description of each of your transactions, because at the time of refund you will be submitting a summary of all your transactions, a further extended form of your VAT return summary. So in that you should be able to provide all the detailed description of your transactions, being it the sales or your expenses, from where the transaction has happened to where it has been um, transacted to. All those details will have to be provided. And also, if the taxpayer is having a refund for multiple quarters, you should make sure that you have only 4 quarters in a single application. This is actually a recent update that we have seen from the FTA, because supposing you are having a refund of more than 4 or 5 quarters, it could be actually 10 quarters maybe, and you're submitting all the 10 quarters refund in a single application. There's a chance that FTA will either reject it or come for resubmission, asking to include only 4 quarters maximum in a single application. So it is better to go that way so that FTA will not either reject it or come for resubmission. To save the time, we assure that you should go for 4 quarters in a filing. Next is the refund at the time of deregistration. So once you are about to deregister your company or you have refunds at the time of deregistration, it is better to claim the refunds before you apply for VAT deregistration application. Because if there is any payments or if there is any tax payable amount or any refund amount pending in the portal, there is a chance that FTA might come back to you requesting to make necessary changes in the portal. Because if there, supposing if there is any amount that is pending in the portal, that is payable amount, FTA will ask you to pay the amount before you proceed with the deregistration application. Same way, if there is any refund amount that is available in the portal, you're requested to apply for refund first, claim the amount, and then apply for deregistration. Also, it is better to have all the information in hand. As mentioned earlier, you should be having all the information related to the refund available in hand before you submit the deregistration. You also have the option to disregard the amount if it is not a material amount. For example, in some cases, you might be having refunds of small amounts, meaning like 10 to 20 dirhams and all. It is not necessary that you might actually go for the refund because it is a time consuming process. As per the decision of the company, you also have the option to disregard the amount at the time of deregistration. Next is the topic of VAT deregistration, which will be taken over by Mr. Rashid.
Oh, thank you, Amrutha. So, hello, good afternoon, all. I'm Rashid here. So, today I would like to give some insights on VAT deregistration. what are the cases where we are required to submit the deregistration applications and all. So let's go through them. So generally there are three cases where we need to apply for deregistration. Deregistration means like we will we will be deregistering our VAT account from the FTA portal. So let's go through once. First case is when you cease making taxable supplies. That means when you are stop making taxable supplies, or when you are going to close your company, and or if you are still making taxable supplies but the value of the supplies in the preceding 12 calendar months, if it is less than the voluntary registration threshold of AED 187,500, then you have to apply for deregistration within 20 business days from the occurrence of the event. Means at the point when your taxable turnover, there are two thresholds are there in VAT registration. One is voluntary registration threshold, the other one is mandatory registration threshold. So voluntary registration threshold limit is AED 187,500, and for mandatory it is 375,000. So at any point of time, if your turnover of the past 12 months falls below the threshold of 187,500, then you must apply for deregistration. So from which date? So when your turnover falls below the threshold, from that date within 20 business days, you have to submit the deregistration application to avoid late application penalty, late submission penalty. So this is the first case. The first case means when your turnover falls below the threshold, or otherwise you are going to close the company. Then next case is if you are still making taxable supplies, but the value in the previous 12 months was less than the mandatory threshold, and you have completed 1 year from the date of VAT registration. That means your taxable, still you are making taxable supplies, but the value is less than the threshold limit of 375,000. That means above the 187,500, but below the mandatory threshold of 375,000. So in that case, you may apply for voluntary deregistration. So the first case was mandatory deregistration. That means you have to submit the application within 20 business days. Here, you may opt to apply for voluntary deregistration because still you have turnover. Your turnover is above the voluntary registration threshold, but below the mandatory registration threshold. So in that case, you may apply for voluntary deregistration. So the third case is accidentally if you have two or more TRN for the same entity, or you have registered a branch. Actually, the branch is not supposed to be registered for VAT. So branch transaction will be including under the VAT return of the parent company. So if in case if you have applied for VAT registration of a branch, so in that case you have to deregister this branch, or FTA mistakenly if give two TRNs for the same entity, then you have to deregister one account. So these are the main cases where deregistration is required. We will be discussing the eligible date of deregistration. So when we submit the deregistration application, we have to select the eligible date. So we will be discussing in these three cases. So if you are deregistering on the basis that the business is no longer making taxable supplies, means if you are if you have closed the company, then the eligible date of deregistration will be the date starting from which the taxable person stopped making taxable supplies. That means the date when the board of directors passed the resolution to close the company. So from that date onwards, within 20 working days, you have to apply for deregistration, and this will be the eligible date of deregistration. The next case is if you are deregistering on the basis that the business is making taxable supplies but below the threshold limit of 187,500, then that date when your turnover falls below the threshold that date will be your eligible date of deregistration. The third case will be when you are deregistering on the basis that the business is making taxable supplies above the voluntary threshold but below the mandatory threshold. That means if your taxable turnover is lies within the cap of 187,500 and 375,000, then you can opt a deregistration date. So this deregistration is based on the voluntary option. So you can select a preferred deregistration date. In any other cases, then a relevant date you consider that you are required to deregister. So you can select a eligible deregistration date in any other case. So next we will be discussing what are all the documents that we need to upload along with the deregistration application. So if you are deregistering based on the case that the business is no longer making taxable supplies, that means once you are close the company, then you have to submit the proof of stop making taxable supplies. This could be trade license cancellation or liquidation letter or board resolution to liquidate the company, visa cancellation of the employees. These documents we need to upload along with the deregistration application. And furthermore, we need to upload financial documents like trial balances, P&L statement or balance sheet. Then again, one turnover declaration is there. So in this turnover declaration, we will mention the details of our taxable turnover and expenses that we made from the date of VAT registration till the date of we are submitting the application. So these two are the main important documents that we need to upload along with the deregistration application. Now, if you are deregistering on the basis that the business is making taxable supplies but below the voluntary registration threshold, that means in the case of mandatory deregistration, we have to upload the financial documents like TB, P&L or balance sheet. Along with that, this is optional actually. This TB, P&L and balance sheet. Instead of this, you may upload the turnover declaration. This will suffice these requirements. So turnover declaration along with one more declaration will be there, that in that declaration we will be declaring that we will not expect our turnover that it will cross the voluntary registration threshold of 187,500 in future. So that declaration also we need to attach if we are submitting the application based on the mandated deregistration. Then if you are in the continuation of the previous slide, the next case is if you are deregistering on the basis of that the business is making taxable supplies above the voluntary threshold but below the mandated threshold. That means if you are submitting the application based on the voluntary deregistration. So in that case, same documents like we discussed, declaration, turnover declaration letter, again declaration letter that the resident does not expect to exceed the mandatory threshold. If if you are deregistering on the basis of any other reasons, then we need to upload all other relevant supporting documents that are that FTA notifies. And here one important note is that the failure of taxable person to submit the deregistration application within the time frame specified in the tax law, the penalty is 1000 AED in case of delay, and on the same date monthly thereafter up to a maximum of 10,000. For example, your turnover, you are making taxable turnover, but your turnover of the previous 12 months fell below the voluntary threshold of 187,500, then you have to apply for you have to submit the deregistration application within 20 working days. If you are late, then immediately you will be getting the penalty of 1000 for the first month. And if you are late by 2 months, the penalty will be 2000. That means monthly you will get a penalty of 1000 monthly up to a maximum of 10,000. That means if you are late by 11 months or 12 months, you will be getting only 10,000, not 11,000 or 12,000. So this is the penalty for late deregistration application submission. So next, I would like to give some insights on the FTA VAT audit. So recently, FTA is sending notifications of VAT audits to some of the taxable persons. So there are many circumstances which will be leading to getting the FTA audit. So FTA VAT audit is nothing but an audit conducted by the Federal Tax Authority on the business's financial records to ensure that the transactions are accurately reported in the VAT returns. Their main objective is to ensure your transactions that are accurately reported in your VAT returns. And the other main objective is to verify if the business has complied with the provisions of UAE VAT law and ensure proper VAT calculations, timely submission of the returns, and maintenance of VAT related documentation. The main importance is when you are a taxable person, when you are a VAT registered person, you have to comply with UAE VAT law and you have to submit your VAT returns on time, on or before the due date, and you have to pay the due tax to the FTA, and you are required to maintain proper supporting documents for a period of at least 5 years. And during this FTA VAT audit, FTA will ensure that the output tax has been properly collected and paid to the government on or before the due date, and the refund has been claimed correctly, and the returns are properly filed in each tax period. So they will look into it, all these things. So if you have any questions, we will be discussing in the last session. So we'll be answering to your queries. So here, the possible circumstances which may lead to FTA VAT audit. So one case could be late VAT registration and deregistration. If you are submitting your VAT registration or deregistration application after the due date specified by the FTA, then it may trigger FTA VAT audit. The second case will be improper VAT return filing. So some people might be filing VAT returns on time. For some quarters, they'll be filing the VAT returns on time before 28th of the particular month. In some quarters, they might be filing by late. So there will be an improper VAT return filing. So in that case, it could lead to VAT audit. FTA will be monitoring when you are filing your VAT returns. The next one is incorrect claim of VAT refund. If you are claiming inputs which is not allowed, or if you are incorrectly claiming input for example, you are supposed to claim one input of 1,000 dirhams, but mistakenly you have claimed the input of 2,000. So in that case, FTA might ask you the reason of claiming the extra refund. So this could also lead for FTA VAT audit. Then tax evasion. If you are evading the tax, if you are collecting the VAT amount and giving to the authority like not properly. For example, if you are collecting 5,000 VAT from your customers, but you have reported only 2,000 in your VAT return, then this could also lead to FTA VAT audit. The fifth one is incorrect issuance of tax invoices, credit notes, and non-maintenance of proper supporting documents. So there are some requirements of issuing tax invoices, and some informations are required to show on your tax invoices mandatorily. And there are cases where you have to issue credit notes, and you have to keep the supporting documents of all transactions, like I said, for a period of 5 years. If you are failing to do so, then it could also lead for a FTA VAT audit. And the next thing is, will FTA notify you before conducting a VAT audit? Generally, FTA will not give any surprise visits. FTA will give a reasonable time to prepare for FTA audit. So here, generally the FTA authority will not give any surprise visits and conduct audit. They will inform the taxable person in advance to be ready for the FTA VAT audit, and will ask to keep all the documents ready. FTA will give reasonable time to be prepared for audit. If required, they may extend the time on sufficient grounds. So if you cannot make it ready all the documents within the time specified by the FTA, you can request to extend the date. So if they found it is reasonable, then they will give you the extension. So FTA is expected to give a notice of minimum 5 working days before they visit for FTA audit. This is the general case. In some cases, FTA may instruct other government bodies to make a visit without notice to make sure the compliance with respect to issuing tax invoices for all transactions and the tax invoice issued are in line with FTA VAT law. So some in rare cases, FTA may instruct other government bodies to make a surprise visit. They will also give surprise visit, but this is rare. In general, they will not give any surprise visit. They will inform you in advance. Then next we'll be discussing about what are the documents to be kept ready for VAT audit. So we need to keep these documents like tax invoices issued for customers, then tax invoices received from suppliers of goods and services, then supporting documents for export and imports like custom document, exit certificate, entry certificate, bill of lading, airway bill. These all documents are required to maintain. Then tax credit note issued to customers in the case of sales return. If you have made any sales return, you have to issue tax credit note. That is mandatory. Then FTA will be giving you one Excel file. That's a transaction data Excel file. So we have to fill the informations which is specified in that Excel file. Like we have to give the details of the taxable supplies that we made and taxable expenses, imports, export, out of scope transactions. This all will be asked by the FTA through that Excel file, transaction data Excel file. So that we have to fill and we have to send by email. Then next one is reconciliation of revenue and expenses with VAT ledger. These supporting documents we need to keep. Then general ledger and trial balances for the period pertaining to audit. For example, if FTA is conducting an audit of 2018 or 2019, then you have to keep ready the general ledgers and trial balances for that period, particular period. Then signed audited financial statement. Audit report also required to keep ready. Then legal documents of the entity like trade license, ijaris, then KYC documents of the shareholders. Then bank statement also for a particular period. These are all the initial documents that FTA will be asking. Once they review your documents, they will be asking extra additional documents whenever is required. So we have to be ready. We have to keep all the documents. Then how to be ready for FTA VAT auditing. So installation of proper accounting system. The taxable person should maintain a proper accounting system which should generate tax related transactions at any point in time. The authority will review your accounting system. So use of proper accounting software will enable you to produce proper tax invoices, credit notes, VAT returns, and other types of report. So we suggest you to implement a proper accounting system to give all the documents in time. Then maintenance of supporting documents. Like I said, you have to keep your old supporting documents for the transaction that you are carrying out, at least for a period of 5 years from the end of the tax period to which they relate. Then timely filing of VAT returns and payment of due tax. So you have to file your VAT returns on or before 28th of the month, and you have to pay due tax before the due date. So some people might be filing the VAT returns on time, but they will be paying due tax after the due date. So you have to ensure that you are filing your VAT returns and paying due taxes to FTA within the due dates. You have to implement a system of internal control. So a tax person should implement a proper internal control system to ensure that the provision of VAT regulation is complied. And an efficient internal control system helps in timely submission of VAT returns, reviews, and reconciles records, ensures compliance and avoid penalties. So you have to have an internal system where you have to assess your transactions, and you have to ensure that all transactions are in compliance with the VAT law. Then now we'll be discussing about some city registration challenges. So my colleague Amrutha will take forward.
So here we'll be discussing the basic CT registration challenges, what we are facing now. Firstly, being the financial year. Financial year is one of the main factor to be looked into at the time of corporate tax registration. So financial years are usually considered or taken from the MOA of the company. So, for example, if the company entity that is not having a MOA, or if financial year is not particularly mentioned in the specified in the MOA, taxpayer is expected to follow a financial year based on the board resolution passed by the board of directors. Second one being understanding the legal type of the entity. So, for example, in this is particular mainly in the case of free zone establishments, because to understand if the free zone establishments being the FZEs, if it is particularly belonging to the category of a limited liability company or if it belongs to a sole establishment. So FZEs in the case, this can be particularly determined from the MOA, because in the MOA it will be clearly mentioned if it is under the category of a limited liability company or from the incorporation certificate. These two are the documents which helps us in determining if the company is belonging to a limited liability or if it is under the category of a sole establishment. So understanding the legal type of the entity is a kind of challenge that we are facing. Next one being wrong legal type of the entity at the time of VAT registration. This is actually one of the main challenge that we are seeing right now, because at the time of registration, when the VAT was actually introduced in 2018, the registrations which happened in 2018 for specifically in the case of sole establishments, there was no particular option of giving in the actual legal type of sole establishment, which is the national person category of national person. So at that time, the only option which was available was legal person incorporated or legal person other, which was not specifying the sole establishment category in particular. So now, at the time of applying for corporate tax registration, this is a challenge that we face, where there is a difference between what we have registered for VAT and what we are now registering for corporate tax. So this difference is actually getting the applications rejected by the FTA, stating to correct the application or the entity type which you applied for VAT registration. So this field, what FTA has initially told is to deregister the accounts and then re-register it once again with the correct legal type of the company. Also, this is a recent update which we have got from FTA that they might also bring in the option of amendment in the near future. So as of now, we can either go for deregistering the account and then re-registering it, or wait for the FTA to bring in further updates about the amendment to this field. The next one being, if the VAT registered clients do not renew the trade license, Emirates ID, or passport copy of the shareholders, proceeding with the corporate tax application would be difficult, because at the time of registration, we have already provided the details of trade license or the Emirates ID and passport copy of the shareholders, which are supposed to be renewed. And those details are also expected to be updated to the FTA. So if in case you fail to renew your Emirates ID or the passport or even the trade license, at the time of CT corporate tax registration, you are expected to give in the details, renewed details of your documents. Failure, we will have to go for the expected dates with the expected dates. So in this case, there is a chance that FTA might also reject your application or even get back to you asking to renew your documents and then reapply for the corporate tax registration. So these are the basic most commonly seen challenges related to the corporate tax. Next, we move on to the deadlines of corporate tax registration, which will be taken over by Balaram sir.
Thank you, Amrutha. So, as we know, the most of the entities in the UAE are expected to register for corporate tax, irrespective whether you have turnover or not, whether you have profit or loss. Unless you are specifically excluded to register, all the entities are expected to register in UAE. Not only the entities, but also the businesses that are conducted with or without license. So with or without the license. So that's what is expected. So we recommend all of you to go for registration as soon as possible without waiting for the deadlines that we see. But however, um, since the deadlines were given, so I just wanted to cover them up. So the companies which are registered here in UAE, including the free zone entities, as well as offshore companies in UAE. So the deadline is connected or linked to the month in which the companies or the license is issued. So we see the issuance date of a license. So in which month that license was issued, so based on that, the deadline is determined. For example, if the company is registered in January or February, or license was issued in the month of January and February, the deadline was 31st May 2024. So let's say the license of a company was issued on 5th February 2020. So though the company, like, no, it's 5th February 2020 is the issuance date of the license. So for them, the deadline was 31st May 2024 without incurring any penalties. So generally they have mentioned that for delaying registration for corporate tax, the penalty is 10,000 dirhams. So if you want to avoid penalty of 10,000 dirhams for delaying deregistration, where your company is incorporated or license issued in February, 31st May was the deadline. 31st May 2024 was the deadline. So for the licenses which are issued in the month of March, the deadline is now 30th June. So before this month end, you should register your company for corporate tax if you want to avoid any penalty. So likewise for each month they have given it. So April, that is 30th June again, for May 31st July, and so on. So all the companies in effective should be registered by 31st December 2024, irrespective of their turnover and then profit or loss, including the free zone entities as well as offshore companies. So this is what you need to be careful about. So that's the general category of the registration that we have seen deadlines. Here we are seeing some specific category of companies. This category is the residential juridical person who is incorporated or registered after 1st March 2024. So the deadlines were mentioned earlier. In the law, the corporate tax law, they mentioned that a company or business is expected to register for corporate tax before they file first corporate tax return. But afterwards, they have given a released decision number 3 of 2024. So in which they have given this deadline. I think that was issued somewhere in the month of March. That's the reason why they have mentioned 1st March as a specific date for consideration. So residential juridical persons who are incorporated or recognized after 1st March 2024, the deadlines are the dates that are mentioned on the screen. So any company established before 1st March 2024, the previously related deadlines will be applicable to them. So for new companies which are incorporated after 1st March 2024, these are the deadlines. A person, including a present person, which is incorporated or recognized in UAE after 1st March, they should be registering their company for CT within 3 months from the date of incorporation. Let's say your company is incorporated on 15th March 2024. So you have 3 months from then, like, April, May, June. So by 15th June, you should be registering your company for corporate tax purpose without incurring any penalty. So this is with respect to a resident person. A person that is incorporated or recognized outside UAE. So you have a company which is not in UAE. So a person that is incorporated or recognized outside UAE after 1st March 2024, but having a OM in UAE. So you have a company which is outside UAE, but that company is effectively managed and controlled from UAE. So then that company becomes a taxable person in UAE for corporate tax purpose, though the company is outside. But since it is effectively managed and controlled from UAE, it will be subject to tax in UAE. So for those companies, the registration deadline is 3 months from the end of the financial year of the person. So here, what do you mean by the financial year? Generally, here the financial year of that particular foreign company will be considered to see whether that 3 months is elapsed or not. Now, the next category is a juridical person who is non-resident person before 1st March 2024 shall apply their registration based on the dates mentioned. So you are a non-resident person, means you are a company which is outside UAE, right? For them, they can be a taxable person in UAE either through having a permanent establishment or through an excess in the state. In one of these two cases, you will be considered as taxable person in UAE. You're not a resident person, but you're a taxable person, and your income to the extent of that particular permanent establishment or nexus in UAE will be subject to tax. So those entities are expected to be, register for corporate tax accordingly as the date mentioned on this. So a non-resident person incorporated before 1st March 2024, and they are becoming taxable persons in UAE by way of permanent establishment. For them, the deadlines given is 9 months from the date of existence of the permanent establishment. Whenever that foreign company is having permanent establishment in UAE, within 9 months from the date of that permanent establishment is your deadline. As you all know, the UAE corporate tax law became effective from 1st June 2023. We have to look at the double taxation avoidance agreement for each of the companies based on wherever the company non-resident person is incorporated. So if any rule is mentioned which is in contradiction to UAE corporate tax rule, so that rule will prevail in whatever respective provision that you're looking at. So same way for permanent establishment, generally in most of the DTAs as well as in foreign corporate tax laws, 6 months period is what is considered as a reasonable period to have to make to say that we have a permanent establishment. There are various other situations or scenarios where you'll become permanent establishment being established. But yeah, if you are connected to a work or something that you're doing for construction or whatever, so in that case, it is 6 months from the date of your. If you are doing that particular activity for 6 months in UAE, though you're a non-resident person, you're considered as having permanent establishment in UAE. So from that date, within 9 months, you're expected to register your company for corporate tax purpose. And the next category is that a person, a non-resident person having nexus in the state, means a non-resident company which is purchased or investing in a residential property or commercial property in UAE. So they become taxable persons in UAE by way of nexus. So for them, the deadline given is 3 months from the date of the effective date of the decision, which was 1st March 2024. So 3 months become 1st June 2024. For all the non-resident persons, if they are investing in residential or commercial properties in UAE, for them the registration deadline was 1st June 2024. So a juridical person who is non-resident is what we have seen. A natural person, so who is not a company, a natural person, so for them the deadlines are given as such. Natural persons means the individuals like you and me. A resident person, UAE resident person, conducting business activity whose turnover during 2024 Gregorian calendar or subsequent years exceed 1 million dirhams turnover. Okay. For them, the deadline is 31st March of subsequent Gregorian calendar. So for natural persons for residents in UAE, if you have a turnover, which is a business turnover, so if that is exceeding 1 million dirham, generally for natural persons, the calendar year is what is considered. So if your business income is more than 1 million dirhams in this calendar year, let's say for 2024, or any calendar year in subsequent period, so for them, the registration deadline is 31st March of the subsequent calendar year. So if you take 2024 calendar year, if your turnover is 1 million dirhams, or if your business income is 1 million dirhams, whether you hold or do not hold the license, you are expected to comply with corporate tax law. So your income will be subject to tax, and you are expected to register your business income or as a natural person before 31st March 2025 in this case. So taxability will be not different. Like, after exceeding 1 million dirhams, if your turnover is less than 3 million dirhams, you can go for small business relief. That is different case. But registration is mandatory and filing the return is mandatory as long as your business income is 1 million dirhams or more or exceeding 1 million dirhams. That is with respect to resident persons. With respect to non-resident persons conducting business activity whose turnover during 2024 Gregorian calendar year or subsequent years exceed turnover of 1 million dirhams. So for them, the deadline is 3 months from the date when the turnover exceeds 1 million dirhams. So here we need to keep on looking at what is the turnover of a non-resident person who is conducting business activity in UAE. Again, for them also calendar year is relevant. In a calendar year, if your turnover is more than 1 million dirhams, then your subject to tax in UAE for corporate tax purpose. But the deadline for you to register for corporate tax is that it is 3 months from the date when you exceed 3 million dirhams. So within 3 months from the date you exceed 3 million dirhams, you are expected to register for corporate tax purpose. Let us say a non-resident person, he is conducting some business in UAE and his turnover by 15th June 2024, he is exceeding 1 million dirhams. So now he has to register within 3 months from this 15th June 2024, within 3 months. That's what we have to look at. So this is the 3 months from the date when the turnover exceeds 1 million dirhams for a non-resident person. So these are the deadlines that are applicable for natural persons if they are conducting business activities. So there is a lot of ambiguity. Generally, it is there. Natural persons, any income that you generate out of your employment, like salaries, bonus, and all those things out of the contract with your employer as an employee, that is not subject to tax. And your investment returns in the capacity of natural persons, which you are not conducting as a business activity, that is also not subject to tax. And investments in real estate business, where you are expected to take license to conduct or to invest and operate those property investments, then that income is going to be subject to tax. So if the income is earned out of your personal capacity and not expected to go for license, you are not required to have a license to invest and then operate those properties, then there's no tax and your income is not subject to tax as an individual. But in all other cases, if you're conducting any business activity or investment in a business which into your properties for which you are expected to take a license, the income generated out of those activities will be subject to tax, corporate tax, if it is exceeding 1 million dirhams. In this case, even the sole establishments also will be considered for the purpose of, is considered as part of the natural person or the owner. Sole establishments will not be registered on its own on individual capacity. They'll be clubbed with natural person's income, and sole establishment and the owner together is considered as one. So natural person will be registered or owner will be registered for corporate tax purpose, and these amounts and these deadlines will be applicable to those businesses. So this is about the deadlines for corporate tax registration for natural persons who are residents here or who are non-residents in UAE. Yeah, so this is what we wanted to cover as part of the session. We tried to answer the questions that were raised in the chart. I think one question that was asked is that can we register directly to corporate tax without registering to VAT? Yes, the answer, Tayabad. Thank you very much for answering to Naveen's question. Even if you're not registered for VAT, you can directly register for corporate tax purpose. The registration again happens through your Imara tax portal. You have to register for that, and you have to submit all the details of your company and the owners. If you're already registered for VAT purpose, the KYC details of the company and owners will automatically populate. If you're not registered for VAT, you are now expected to mention all those details when you go for corporate tax registration. That is the only difference you'll have. So, if you have any other questions, we are happy to answer. I know we exceeded the time by 20 minutes. Sorry about that, but yeah, we wanted to cover the particulars and details. If you have any other questions, you can put them in the chat, or if you have any other questions, you can reach out to us on our email, which is info@spectrumaccounts.com. You can also check our YouTube channel for various presentations and also look at our website where we publish a lot of blogs on each respective topics. So thank you very much for joining us, and we will be continuing to have more webinars going forward on various important topics. And I hope that we have added value to your understanding of the laws here. Uh, we only try to give some value addition, but the important thing is that whenever you have any doubt or anything, the Federal Tax Authority's website or Ministry of Finance is the only official source for you to go back and check your law and law related matters. And so it's only after reconfirming through the official source of Ministry of Finance or Federal Tax Authorities that you should conclude on your decision. So it's only our opinions, the personal opinions of the individuals that have been spoken. So it's nowhere or no means should be considered as a opinion or official opinion. So I see a couple of questions coming in. Our invoices are generated with decimals, let's say examples of 5.35. What can be triggered VAT if I collect cash or bank 5.25 from the customers and put point fields in 4.110 fields in expense account loss again? What can be triggered if I collect cash back 5.5? I think FTA has given a small clarification on this. You can round it up to I think 0.25 fields, 25 fields, if I'm not wrong, and then accordingly you can collect it. Uh, but I advise you that you always round it up to the favor of FTA, and then make sure that the tax amount on your transaction value is not lesser than 5% of computation. Also, can you put some insights on VAT charged by GCC VAT implemented state? So when they started VAT for GCC countries, so the agreement between or among all the countries was that all the countries will bring the VAT and they will have common VAT refunds and then adjustments and all those things. But since not all the countries have implemented VAT yet, and unless the UAE country recognizes the other country and then other country of GCC recognizes UAE as implemented state, the implemented state or implementation state has no relevance in UAE VAT at the moment. So it's only UAE and rest of the country is what we have to look at. That's how we have to look at until the time the implemented states concept comes into effect officially. So at the moment there is no implemented states concept officially yet. So it is only UAE and the rest of the world from the for the purpose of UAE VAT purpose. So yeah, I think these are the questions that we had. Once again, thank you all for joining us on today afternoon, and we'll be sharing the recorded version of the session as well as the presentation for your reference. Thank you all once again, and have a good day.